Welcome traders to another episode on Prophecy Trades. Today's video we will be covering four currency pairs: Euro CAD, Euro USD, Euro JPY, and CAD JPY. So today's video is just a friendly update of some progress of some current trades, and as you can tell, Euro CAD is not looking too hot. On this channel we'll be doing full transparency. We actually exactly kind of what happened and what I saw. So we entered this trade. There was a market structure shift. We saw a bullish engulfing candle. We were another confident confirmation of being in the trade. Price retraced, rallied up, strong signal for continued longs. Price was then going to potentially retrace, respect this EMA, this moving average, and potentially respect this trend line. There was some minor slippage, still maintained within our Fibonacci fib trick box or zone. Price then continued to rally to the upside, and this happened for hours and hours and hours on end. And then we did check the any type of forex news. We did not see any conflict of interest, high impact news. And then price then surely collapsed, came down. We were looking for our potential retest, maybe drawing a potential new trend line based on these points here, and seeing price could still continue to the upside. Price did not do that. Validated. Price came down aggressively. Bearish engulfing, retrace, made a potentially a lower high. Price never failed to make a higher high. Price made a high, and then this is a form of a double top. This is a signal for a reversal pattern, and then price came down and surely hit our stop loss for 1%. So again, we moved the motion from trading. We knew what we were risking, and we are going to move on to the next opportunity. If this trade was correct, this would have been about a 1 to 8.93. So let's just round up to a 1 to 9. So I'm very comfortable risking 1% to gain 9%. So far we are minus 1% for Euro CAD. And same unfortunate event. We were looking for an opportunity for Euro USD. As you can tell on the market, we were actually stopped out around that London session again with the Euro USD pair. We actually entered this trade. We had multiple confluences. We had a nice strong trend line. We had a nice Fibonacci respecting that 61.8% fib zone with the bodies of the candles. Price did wick down to that 70.6. We were within that fib trick box. Price respected it. We had a dragonfly type or gravestone type indecision candle. We had inducement, we had equal lows, and then price then potentially pushed down retailer traders out with a stop hunt. We entered surely just after. We had a nice strong bullish engulfing candle, and price then came up and tapped and respected that higher high. So basically making two equal highs. And what should have happened was I should have moved my stops to break even. I was away from my computer, and we actually then eventually came back down, and price then surely came and took us out of the market, like I said, around that London session. But then I look at this more thoroughly, more technical analysis. It does feel almost like a whipsaw. Our bias is still showing that we were correct, but we just didn't put a healthy enough stop loss to maintain the indecisions with candles, with the bullish and bear market fighting in this hour time frame. So as you can see, there's a very strong market structure, bullish engulfing candle here, and price is currently rallying pretty strong here right now with a lot of volume, potentially printing to that minus 27. This would have been a 1 to 5.5, currently down 1% as well. So with Euro CAD, Euro USD minus 2%. Also, Euro JPY, we are again. It's sometimes weeks like this happen. We are in a stop. We got stopped out again. Looks like we got stopped out. Probably the session. Looks like we got stopped out. But basically, we had multiple confluences. We stuck to our strategy. We have a trend line. We have the Fibonacci respecting the 50%. We're within the fib trick zone. We have a fair value gap, and we had enough confluence there to signal a buy. We had indecision candles. We had bullish engulfing. Enter, stop losses, maintained our rules. And unfortunate event, we just got stopped out. This would have been roughly a 1 to 8.5 Again, if I can risk 1% to gain potentially 8%, that is a healthy risk reward. And again, this is why risk management is key. Losing streaks happen, and also winning streaks happen as well. So, you can get hot and win, four trades in a row, and then you might feel like, I'm risking 1%. I'm now gonna risk 5%, 10%, and then you get that one trade, you risk that 10%, and it wipes out all your trading for the week. And this is why proper risk management is key. We're always risking that 1%. We're maintaining to that rule. And now the goal is, with now losing these 3 trades consecutively, the goal is to recover. I just need one trade to win, to wipe out all of these losses. And that's exactly what I'm about to dive into next right here. We have CAD JPY. So this is a trade that we saw, we identified in the New York session. First confirmation, we saw a trend line. We saw a nice market structure. We had higher highs and higher lows being printed over in this region of the chart. We do have a fib trick being placed here. This blue box here, we have a Fibonacci rejection zone, mainly at that 38.2, price wick down to that 50, and just barely respected that 61.8, which is that golden zone. We also did see some price action as well, and we are above the 50 EMA. So for me, that was a nice intraday setup for me. I'm going to dive into the 15-minute to show you what I saw. I actually entered, I believe, off the 5-minute. We saw this candle, nice wick, it closed, and then we jumped to the 5 minutes shortly after that. And this is where we saw that bullish engulfing candle here, enter. Almost immediately in profit, and the goal is, at least considering where we are with the 3 losses, just getting a 1 to 3 will erase everything that just happened, and putting us back on the board. So right now, this trade is roughly a 1 to 4.34. Looking to potentially take some partials here. This is like a 1 point, almost a 1 to 3. So just by targeting this minus 27, this is going to put us back into a profitable, in removing that losing streak just by doing that as well. So we're probably going to take this all the way up to that minus 61.8, see how price prints. And I'm going to do this right now. I'm going to open my MetaTrader, and I'm going to move my stops to break even right now, because price came up, wicked, and hit this previous high. We're trying to mitigate any risk right now. So move to break even. And moving to break even would be a 1.09121. Give me 1 second. All right. So stops are now moved to break even, risk-free trade. And now all we're doing is monitoring the trade and looking to take a nice partial at the minus 27. So today's video was really a learning lesson. Hopefully that helped other traders understand the reality of trading and understanding a nice element of why risk management is key, and how you can still be profitable, by having those losing streaks, and just maintaining discipline, structure, sticking to that trading plan, reading your trading journal, and that's the name of the game. But if you're liking these videos, press the like button and subscribe.